Hello, everybody. Welcome. Let's get started. Markets are down. Dow Jones down 0.5%. Nasdaq down 1.3%. S&P 500 down 0.9%. Russell 2000 down 1.1%. Lots of company-specific issues going on. Give me for 1 second, please. Give me 1 second. Let me resolve something here. All right, let's continue. I think everyone can hear me. Tesla is down 5%. Nvidia is down 2.5%. Reasonable volume on this end of April. VIX is up to 26. It was up earlier, a lot higher today, this morning. Gold is down slightly. European markets closed a little higher. Asian markets were higher as well. I don't know what Trump is talking about when he says China is struggling, but 2-year yield is at 357. Expecting rate cuts second half of this year and next year. 10-year treasury yield is at 417. Okay. And then oil prices are at $58 per barrel. That's amazing. Down 4%. Oil price at $58 per barrel. Copper is down 5% on recession worries. And natural gas is down as well. There's a few company-specific news that I want to get to. Let's dig into that. But first, let's read this Reuters article of the day. Wall Street tumbles as economy contracts for first time since 2022. Wall Street's main indices dropped on Wednesday after data showed the economy contracted for the first time in 3 years in the first quarter, deepening concerns around the impact of US tariffs and the global trade war. The Commerce Department's Advanced Gross Domestic Product report took center stage on data packed day, showing a 0.3% contraction for the first quarter, compared with expectations for 0.3% growth, according to economists polled by Reuters. So this is in line with what we've been talking about. The economy started weakening earlier this year. I think January was okay. February first half was okay. People kind of thought that maybe it was due to weather. And then with March, they didn't get the bounce that they were expecting. And so that started concluding the economy was weakening. And then came April 2. So tariffs. So I think the economy was weakening quite a bit in the first quarter. We're now seeing that in data as well, with the contraction of 0.3% compared to expectation of 0.3% growth. Private payrolls growth also slowed down more than expected in April, while the personal consumption expenditure index, the Fed's preferred inflation gauge, was broadly in line with expectations. Consumer spending grew 1.8% after a robust 4% jump in the fourth quarter. The company's Wednesday's reports join a series of data releases over the month that have pointed to an increasingly uncertain outlook for the US economy as the fallout from the Trump administration's steep tariffs and erratic trade policy take effect. Traders are now pricing in a full percentage point interest rate cut from the Fed by the end of the year. I don't think they're going to get that, but we'll see. The Fed has been very data dependent, and they're going to want to see some of this hard data like GDP and some of the labor market data really show signs of weakness, said Charlie Ripple, senior investment strategist at Alliance Investment Management. We're starting to see a little bit of that, which is really why you're seeing the market reacting the way it is today, this person said. Declines were broad-based, with most S&P 500 sectors in the red and the energies index leading losses with a 3% drop. The economically sensitive small cap Russell 2000 fell 1%. Meanwhile, Magnificent Seven members Meta and Microsoft fell 2.6% and 0.9% ahead of their results due after market close. That investors are watching closely for clarity on the outlook for the tech sector and AI-focused investments. Fanning concerns about the pullback in investments into AI, Supermicro cut its third quarter forecast due to delays in customer spending, while Snapchat parent Snap said it would not provide second quarter financial forecasts. Their shares fell nearly 15% each. Caterpillar slipped 1%, reversing pre-market gains booked after its quarterly results. That's interesting. We're going to dig into that a little bit more. And then I'm going to also dig into Supermicro. Okay. Wall Street's indices recouped some ground this month, etc., etc. S&P posted snapback, blah, blah. Wednesday also marks 100 days jump to goals. Okay. Declining issues outnumbered advances by 3-1. All right. Let's read Supermicro first because that has implications for NVIDIA and the chip sector, which is pretty important in the remainder of the um, earnings season. AI server maker Supermicro on Tuesday cut its third quarter revenue and profit expectations due to delays in customer spending, amplifying worries of a pullback in AI-linked investments and pushing its shares down 16%. The dour projections come after months of accounting issues had prompted a potential delisting, damaging customer and investor confidence in a company that had emerged as one of the biggest winners of the AI trade. I wrote an article on Supermicro about a year ago and said sell short, and the company stock has plunged since then, down 65%. And most of the drop has come in the first 6 months after the article was published. But from the peak, it's down about 80%. Yeah. PE ratio of 13 on Supermicro. PE ratio of 13, $18 billion market cap. So it's a lot, and it's not a small company. It's an $18 billion company, 13 PE ratio. But this sector, I don't think is about PE ratios. I think that's what people miss. Anyway, investor jitters around AI spending have also heightened as US President Trump's sweeping tariffs on trading partners have sparked fears of a global slowdown. NVIDIA shares fell close to 2% in after-hours trading, while AMD stock slipped about 1% following the cuts by a key partner. Delayed customer platform decisions moved sales into the fourth quarter, Supermicro said, trimming its preliminary revenue expectation for the 3 months ended March 31 to a range of 4.5 billion to 4.6 billion from 5 to 6 billion earlier. Wow, that is a massive revision. That's a massive revision. Delayed customer platform decisions from 5 to 6 to 4.5. That's crazy. Wall Street has highlighted a potential slowdown in investments in AI infrastructure, even as Alphabet and Amazon have reaffirmed their ambitious plans. You know what's really interesting is every time these analysts come out with a report that says Microsoft or another company is canceling data center projects, these big scalers come out and say, no, we're not. We're still on track to spend whatever. And now SMCI, now this is in hard data. This SMCI forecasting coming from a company itself, from 5 to 6 billion to 4.5 to 4.6 billion. Just 3 months. In 3 months, they revised it that much. That's crazy. That's crazy. That's like if you take the upper hand, 6 billion to 4.5, 1.5 billion revision. That's a 25% revision from the upper end. From the lower end, more like 10%. So 10 to 20% revised downward. If you take the midpoint, 5.5, 1, that's a 20% revision down. That's crazy. In 3 months. And that people say there's no slowdown in the sector. That's crazy, crazy talk. TD Cowen analysts last month said Microsoft had abandoned projects set to use 2 gigawatts of electricity in the last 6 months due to oversupply. We also had the Microsoft CEO going on podcasts talking about how AI, nobody's talking about the AI revenue, let alone profits, canceling projects. And, the likes of Gene Munster or what's his face? The other guy. Let me see. Gavin Baker. Always forget his name for some reason. They're out there trumpeting these stocks still. The AI trade is not over. Give me a break. Um, it's possible some of the large hyperscale customers are adjusting their data center plans based on several factors: a weakened economy, tariffs on equipment, and delays in the delivery of NVIDIA's Blackwell products. The DA Davidson analyst Gil Luria. And then on the other hand, you have NVIDIA talking about their next generation. What's after Blackwell? Dude, Blackwell even doesn't have enough demand. Supermicro had said in February its products featuring NVIDIA's latest line of Blackwell chips were in full production. See, this is crazy. That's so crazy. In February, they're all bullish. In just a matter of few weeks, they revised their forecasts for the quarter. That at that point they were halfway through it by 20%. I mean, that's crazy. I don't think I've ever seen anything like that before. Analysts widely believe that demand for older generation AI chips would persist despite new semiconductor launches, given the tight supply of advanced processors. Some analysts pinned the cut from Supermicro to a litany of internal issues. Quote, Supermicro's stumble looks more like self-inflicted wounds than a signal of broader trouble, said Michael Ashley Schulman, CIO of Running Point Capital. Okay, let's look at this, guys. Yes. Running Point Capital. Never heard of them before. A multi-family office of financial experts. Okay. Multi-family office of financial professional across multiple disciplines. So it's more like, okay. What's the guy's name? Let's see. Michael Ashley Schulman. Michael Ashley Schulman, CFA, partner and CIO. As CIO and founding partner of Running Point Capital Advisors, Michael Ashley Schulman is responsible for Running Point's global macro outlook, research, investment strategies, PPLI and PPVA management, asset allocation, and impact on social assessments across public and private investments. Michael has over 20 years of institutional high net worth portfolio management, research, trading, asset allocation experience across fixed income, equity, hedge fund, real estate, and private investment classes. He has built quantitative and fundamental systems, modeled collateral as debt obligations, lakes, CDOs. That's it's a big name, a big acronym during the global financial crisis. So he sounds like he's where the bubble is. And managed fixed income arbitrage hedge fund on a multi-strategy fund of funds. Okay. Prior to Running Point, Michael was a partner managing director and senior portfolio manager, hedge fund manager at Holland Crest Capital Management, a vice president, CBO quant specialist at Deutsche Bank, manager at Accenture, which is management consulting. So this guy I don't think he has any experience or expertise in the field of semiconductors. So he has also been consultant for the World Federation of Exchanges in Paris, Colombian Financial Exchange, several high-tech firms, MBA from MIT, CFA designation, BA in economics from UC Berkeley. Los Angeles. Okay. I wonder how Reuters finds the people that they quote in their articles. Let's finish the Supermicro article real quick, and then we're going to go to Stephen. Tariffs may have nudged sentiment, but it's internal missteps, customer spending delays, and missed expectations that kick the stock down the stairs. Supermicro cut its expectations for adjusted quarterly profit to a range of 29 cents to 31 cents per share from between 46 to 62 cents earlier. So basically halved their profit forecast and down 20% on their revenue forecasts. Shares of rival server maker Dell were down 5%, while Hewlett Packard fell more than 1%. Still, some customers may have chosen to move their business rather than deal with Supermicro's internal problems, potentially helping Dell and HPE win orders. That is wishful thinking. Blake Anderson, Associate Portfolio Manager at Carson Group. Let's look at that one. In the meantime, Stephen, go ahead.
Yes, sir. I was just wondering if you saw the news about the Waymo and Toyota partnership, and if you talked about it yet. I don't know what your topics are right now, but that was my only question.
I mean, there's not much to say on that front. We'll get to that, but we'll get to that. Let me just do this Carson Group thing. Carson Group, run, grow, love your business. Carson can elevate you to CEO. You run the business instead of it running you. What? Nebraska. Trusted fiduciaries. Financial advisors. It's a financial advisor firm. Okay, so these are both high net worth individual type of people. Wishful thinking on their part, I think. 1 second. All right, Stephen, what do you think about it?
I don't know, sir. I mean, I'm not sure if Toyota has the hardware ready to incorporate Waymo's technology. If they do, that's one thing. If they don't, it could be years before you see anything meaningful, I think, from the partnership. But that's why I was asking you. I was hoping you might know more than me.
No, I don't know anything. I know nothing. All I know is I don't know. Actually, that's not the actual quote, but I don't know. I just saw the same headlines that you saw. It's an announcement. I mean, I guess we know a few things. Toyota has tens of billions of dollars of cash, and they have, I think, tens of billions of dollars of net income. What's their net income? Do you know? Let's see.
I do not, sir.
Toyota net income by year. $24 billion in 2024. Yeah. So tens of billions of dollars of net income, which Tesla doesn't have. And they have tens of billions of dollars of cash and hundreds of billions of dollars of assets that they can collateralize if they wanted to raise. So they have access to tremendous amount of cash and financial capital, which Tesla does not have. Okay. Tesla does not have that. That's the critical piece of information that a lot of people miss. All right. Tesla has 30 something billion dollars of cash on the balance sheet, but they need at least $10 billion to run their operations smoothly around the world. They cannot do it less than $10 billion. And I would guess that some of this is also used for kind of these, leasing and everything. It's also used for, the credit investment rating of the company. Now, it doesn't have debt, okay? So it's very much in the same shoes as Rivian in that regard. It just adds like one more zero, basically. Rivian has a lot of cash. They have very limited debt, but neither company has net income. So the problem is, if you don't have net income, like you're not generating free cash flow, then if a situation comes up like the one we're in macroeconomically, a stagflation, recession, even a possible depression. I think JP Morgan CEO recently said that a recession is the best case outcome for what the US is going through. And I agree with that. I think these policies are crazy. And I think the administration is committed to them until something really major changes. And I don't think it's going to be about like 4 or 5% yields. I don't think it's going to be about 10-20% drops in the stock market. I think like something really major has to change for Trump to kind of really major has to happen for Trump to kind of walk back on his policies. So, and even if he does, there might already be some damage in the economy that is irreversible at this point. And so, a global automaker that is not making money when the economy is growing is going to lose billions of dollars, and they might even lose tens of billions of dollars very quickly when things turn down. And I think that's a possible outcome here that people don't realize is happening. Now, Toyota can weather that, right? Toyota is a much more global automaker than Tesla. They have tens of billions of dollars of net income that Tesla doesn't have, and hundreds of billions of dollars of assets that they can leverage, and dozens of models, brands in various countries at various price points. So Toyota is better positioned today for an upcoming recession, and I think the upcoming recession, than Tesla. And I think the Waymo partnership is likely to succeed. These are two companies who are operationally are very good, both very good. They're not like Nissan plus Cruise. This is Waymo plus Toyota. Now it's still a partnership. It's not as good as a vertically integrated company led by somebody who's with it. But that's also not the case for Tesla, right? They're vertically integrated to some extent, but at the same time, they're not really led by somebody who's with it. So, Stephen?
So my question, sir, is with the possible upcoming recession, do you still feel like your price target of $80 to $100 that you referenced in your OpenStack paper, you still feel like that's practical, or do you think it's going to go lower due to the recent changes in the tariff and all that stuff? Do you think that real is, or is that $100 stock price what you think it's worth, or what you think it's going to end at?
I think 100 is what it's worth. And, in a recession, no one really knows how low these things go. Like, we don't know when Trump is going to back off. I think Trump will eventually back off. It's just, this is suicidal stuff. So he's going to end up back. I don't know when. I don't know what the policy reactions are going to be, um, what he's going to do next, or what the Fed will do, what competitors will do, what Elon will do. We don't know any of those things. So we'll have to let the future play out. But right now, the way it stands, I think $100 is where the stock is worth. Yeah, that's crazy though. I mean, Waymo is obviously very capable. They built their cars. They now operate in multiple cities, and Toyota is very highly incentivized to incorporate this technology in its production across the world. And if that happens, will people get rid of a $20,000 vehicle um, that they can own, that can drive itself and ride on robotaxi networks? I don't know. I don't know. But the fact is, like, Elon has been talking about licensing FSD to other automakers, and Waymo is doing it. Tesla has been Elon has been talking about producing $25,000 cars, and BYD is doing it. Elon has been talking about building battery production that leads in technology, etc., and CATL is doing it. So I think on one hand, I see a lot of talk. On the other hand, I see a lot of execution. All right. Any other questions on that front?
No, sir.
Okay. I'm going to switch to Caterpillar. Caterpillar is a globally important company. It may have some implications on macroeconomics, and this is an area I'm interested in. So, Caterpillar on Wednesday reported lower than expected first quarter results on weak construction equipment demand and outlined two scenarios for its annual sales forecast. one of which included the potential impact of extensive tariffs. The two different scenarios by the company considered a bellwether for global economy is a sign of how difficult it was for US companies to plan around Trump's chaotic trade policies. Shares at Caterpillar rose about 1% after the industrial giant forecast an improvement over its prior expectations under a scenario that excluded tariff impact. Including tariffs, Caterpillar said it expects annual sales and revenue to be slightly down from 2024, but in line with its prior expectations. Pervasive tariffs will have a negative impact on their Caterpillar's volume of sales, but their ability to flex manufacturing and backlog visibility suggests they can weather the storm, Third Bridge analyst Ryan Keene said. I think analysts have a lot of rosy, wishful thinking type of comments today. The company expects an additional tariff-related cost between 250 million and 350 million in its second quarter. I don't think we're going to see the tariff impact in the second quarter. I think it's going to wait until the second half of the year. We're going to see very limited. I think orders are starting to show it a little bit, but many of these companies have 3 months of inventories that they bought in Q1 to weather some sort of negotiation period. And then we won't know until the third quarter data comes out what the tariff impact is materializing to be. And then we won't know the full impact until next year because it has to work itself through the supply chain and customer decisions. It's just impossible to know. Caterpillar benefited from former President Joe Biden's 2021 infrastructure law, a $1 trillion spending package that boosted demand for construction equipment. But that momentum has slowed as project starts ease and private sector investment shows some hesitancy amid higher interest rates. Higher borrowing costs and inflation have pressured dealers to realign inventory levels to match demand, while weakness in China's property sector affected infrastructure spending and hurt Caterpillar sales in the region. Quarterly revenue in Asia Pacific fell 12%. Quarterly adjusted profit per share fell to 4.25 compared to analyst average estimate of 4.35. That's a big miss. First quarter sales and revenue fell about 10%, missing expectations too. So how was the stock now? Let's see. Caterpillar down 1% right now. 2% up 2% in the last 5 days. Down 8% in the last month. Down 20% in the last 6 months. Okay. All right. That's that. Anything else on YouTube? Kevin says, now we know why Waymo announced going into Tokyo. Yes, I agree. Waymo is mapping Tokyo. And I think that, we should have seen that actually. Kevin, good point. We should have seen that coming. We should have seen that announcement of Toyota coming when Waymo announced Tokyo. I didn't reach that conclusion. And the other thing I was thinking this morning is, I wonder if mapping the city is becoming easier and easier for Waymo each time they do it. That they're getting more efficient, more effective, etc. Kevin says it will take at least 3 years to integrate Waymo into Lexus vehicles, and another 2 years after that to bring to America. I agree. It's going to take a few years, but this is going to cause serious competition for Tesla. I mean, that's true as well. And I don't think the US will kick Toyota out of the US, just like they limited BYD and other Chinese automakers from entering the US. And obviously, Waymo is a US company. So this is going to be competition for Tesla FSD, robotaxis, as well as vehicle sales. So, I've been saying for the last year or so that Tesla is losing market share outside the US, and it's not going to stop. But in the US, Tesla can continue to be leading, but this can also change now. So this is a serious threat for Tesla. SMCI is down 16% right now. Starbucks is down 7% from already low levels. The stock dropped from about 120 to now $75 in 2 months. That's a massive drop. So Starbucks is kind of trading like Nike. Not sure what's going on there. And as Snapchat is down 14% today. It's a very small company to having sort of the implications, I think, for macro. We talked about Caterpillar. We talked about Tesla. What else is going on today? Google is down 2%, Meta is down 3%. Oil stocks are down majorly. Now, this is all a recession level kind of screaming recession. All this data is screaming recession. But the Fed can't cut. They can't cut next week. CME Fed Watch is still showing the meeting is in 7 days or decision in 7 days. Still showing a 5% probability of a cut expected next week. And I think that's, again, wishful thinking. And then in June, 2 out of 3 market participants expect a cut in June, which could also prove to be um, optimistic and wishful thinking. So if next week Powell comes out and says, we're not going to cut, obviously, and then it says we're unlikely to have this confidence that we're looking for the next cut by the next meeting. If that happens, I think the markets will sell off in a really major way. Because I think the markets are expecting a June cut. But initial weekly claims are still stable. Unemployment rate that's going to be announced on Friday is probably not going to be up by much, maybe pick up by 0.1%. Let's see what the expectations are right now on the betting markets. Recession probability this year rose to 70%. And it was as low as 18% in January when I was calling for a recession this year. So the market has pretty much come around to where I am, except that I think a lot of people are still expecting a small recession. And I don't know if that's going to be the case. I don't know if that's going to be the case this time. I think that might be wishful thinking. But yeah, so US GDP growth in Q2 is expected to be about 0% to slightly positive. Okay. Inflation is expected to be about 2.3, 2.4%. All right, in April. That's going to come out in 2 weeks. So it's still about 2%, and you have inflation expectations surging. So how the hell are they going to cut? Core inflation, core CPI is expected to be 2.7% in April, year over year. Yeah. Jobs numbers this month, about 100,000. So the market is expecting, or at least the Kalshi, where people bet millions of dollars, total of millions of dollars. So it's not a very liquid market, but the market is expecting about 100,000 plus. I guess we can see the consensus estimate here. If I click into this, give me 1 second. Non-farm payrolls expect to be 130,000. Private payrolls expect to be 125,000 on Friday. I think it's going to come in under that. Average hourly earnings 0.3%. Unemployment rate expected to be 4.2. Yeah, that's probably going to come around 4.2. If it ticks up to 4.3, it's not a big deal. Until it goes above 5%, it's hard for the Fed to kind of panic because you don't have any slack. And you can't really boost inflation again if you panic before it surges above 5%. So I don't expect the Fed to come to the market's rescue. I think the markets will continue downward. Unemployment rates. Yeah. 50% probability of a 4.2 and 28% probability of 4.3. So we'll see. Okay. Let's see if there's any other headlines, any other comments from Kevin Weber. I agree on US competition. Competition will be fierce in the 2030 timeframe. I agree. Toyota, Lexus, Waymo may go into China before America. Toyota needs to do something to be more appealing in China. I agree. But I don't think they're going to stop. Toyota doesn't have any issues. I mean, they have assembly plants here. They have a lot of politicians in their back pocket. Lots of customers use their vehicles. So I don't think Toyota will have any problem. The US has good relations with Japan. there isn't any tariff issues between Japan and US. So I don't think Toyota will have any problem operating in US. And this is true despite the fact that Elon paid Trump $300 million to his campaign. Even if he paid $1 billion, I don't think that would make a difference. Toyota spends tens of billions of dollars in US. So Elon will have to do something else to stop Toyota. Maybe get to work for a change. Oil prices on track for biggest monthly drop since 2021. Fed should ditch current policy framework, former central bankers. Nvidia CEO urges Trump to change rules for AI chip exports. Nvidia's wave is coming up. Let's see what he has to say. Nvidia stock drops as Supermicro whiffs. Trump eyes chip rule change. Trump decries Biden's stock market as the economy contracts. Bank of Canada Governing Council mulled cutting rates again in April. Okay. Brazil looking for acquisition in the Americas and Europe. All right. Citizens, not much of a news state, I don't think, if we're talking about Brazilian acquisitions. GM is down 4%. I think we should all recognize at this point that cost of producing vehicles in the US is going up. Cost of producing vehicles in the US is going up, not only because of tariffs, but also because labor unions are negotiating this massive contract for the next 4 years. And this all impacts Tesla as well. Tesla is not immune to these things. Wave,
Hey, Yaman, how you doing?
I'm good. How are you?
Pretty good. I was excited actually to see that news that came out yesterday. I think we talked a little bit about it with Toyota and Waymo. I don't know if you've seen the BZ4X. I was thinking what could be the platform that they go. I don't know if you have them around you. It's their electric version from Toyota. Have you seen them out in your
Well,
area?
it doesn't have to be EV, right?
No, it doesn't. I actually just rented a hybrid plug-in from them as well. And as you know, they were one of the first that invested with Tesla in the sense of as a first customer with the RAV4 years ago. So, and Prius and everything. So they have a deep understanding of managing compute and electrical and electronics within their cars. And this, what I was interested in this car that actually going to go and do a test drive. The sensor suite is pretty impressive too on this. I was wondering from a time to market, they could really start just leveraging the existing suite that they have and working with Waymo and only accelerate what they've already done. So they can take the best of each vertical integration on the software and on the hardware side and come up with a better path forward.
Yeah.
Have you seen any of these BZ 4X? There's a
No, I don't think it's a good car. I mean, I don't think it's a winning car.
you say it's you don't think it's what?
I don't think it's a winning car. I think that car has really struggled in sales. It doesn't really compare well to other options, and Toyota is going to have to come up with a new. I mean, if they want to go the EV route, the problem is EV market share in March in US fell from February. Okay, and I think that Toyota did a great job profiting from people's range anxiety by pushing hybrids.
Yeah,
And
they've done that for years though, for decades. They were
Mhm,
way ahead on the hybrid.
mhm,
I had a hybrid Toyota Camry years
mhm,
ago, so and it was a
mhm,
great car. I wish I would
mhm,
have never sold it.
mhm. And I think a lot of people are going to, I think that's going to be the dominant powertrain for a long time.
Agree.
So I think they're going to probably put Waymo on Lexus hybrids. and then switch, start adding it to Toyota hybrids, and that's the way it's going to be.
I agree, but the sensor suite is what impressed me the most. After I test drive it, I'll maybe come back and give you some feedback on it. It's a surround sensor suite. It's like 2x of anything else that's out there right now. So they're experimenting. I think maybe it's more of an experiment than and
Yeah.
they get the sensor suite right. They can put it on. It doesn't matter what powertrain you put it on.
Hmm. Exactly. And they're going to get it right. Right. They're going to get it right. Like I said, they have tens of billions of dollars of cash. They generate tens of billions of dollars of cash flow every year, which Tesla does not. So they are much better positioned. And then now they partner with a company that already solved autonomy. So they're much better positioned than Tesla to produce millions of vehicles that will drive themselves.
Yeah, I started a table comparing their sensor suite that they have on this compared to what Waymo has, and it's awfully close. So I
Hmm.
wonder if these guys were working somehow in the background and used Waymo and reverse engineered it with a really low cost parts suites. So I
Hmm.
think it might. I'll know when I'm actually test driving it and check it out a little bit in detail.
Hmm.
But I was real happy because Hyundai is good. They've had like 5 years or more experience with different OEMs, but
Hmm.
this is probably their best partnership working relation they've established.
Hmm. Yeah. All right. Um, Thank you very much, Wave. Wave, are you now? Are you a Tesla shareholder? Are you cash? What's your position in Tesla?
No, I'm no longer in Tesla. I have it maybe just one or two, just so I can see it in my portfolio. Uh, but no, I think I mentioned before I'm into a lot more defensive preservation, especially with this tariff. What's going on? And it seems like the only person speaking up is Rand Paul in the
Hmm.
Republican Party, and everyone is too afraid to speak up. Uh, but it's a mess. Everything is frozen right now. So
Hmm. Yeah.
yeah, Treasury is the only thing that it's safe right now.
Hmm. I agree. I agree. Okay. All right.
Are you
Sounds good.
are you still shorting Tesla?
Yeah, I'm still short. I don't really want to talk about personal trades anymore. I just want to focus on research.
Oh, that's good.
Um,
I'm glad you're expanding out to other companies.
hmm. Yeah.
It's never good to be just focused on one thing. Just become a cult follower. Uh,
Yeah.
there's a lot of good things, but this tariff has really messed up everything, I think. And it
Hmm.
actually is going to play against, it's really going to play into the BRICS hand. So the way I see it.
Hmm. Do you
What do you
think
think on that?
what what do I think about what? Sorry.
That it's playing into BRICS hand more than it
Oh,
is.
no, I don't think so. I think the US exceptionalism will remain. I mean, there are fundamental reasons why that is the case, and I don't think that's going to change anytime soon. Maybe if these bad policies remain in place for decades, then you can see US lose some reserve currency status, but it's not going to happen overnight, and Trump is going to be out of the office maybe even before shorter than 4 years. So I just don't think there's much of a risk of that. Um, because like there's no other alternative really. There isn't an alternative. That's the issue. You know. But I was going to ask you, do you think robotaxis first, let me ask you, what do you think is the probability of Tesla never bringing Optimus to volume production? Like, let's say by volume production, I mean more than 1 million units produced.
Less than 10% that they will not, because I think it's existential. they won't have any other game to play. If that is the only thing that would bring the company valuation anywhere near. I mean, the robotaxi is going to become a commodity, especially with this Toyota discussion. So the only, if I, and we've talked about this, I think when Optimus was introduced, I would say I was in Elon's shoe, I would have all chips down on Optimus right now, and maybe he's sandbagging it. I don't think he can afford not to bring it out and bring it out fast.
I don't think he cares. I don't think he cares about Tesla. I think he's moved on. I think he wants to focus on his control ownership of XAI or X Corp and SpaceX and his other companies. I don't think he cares about Tesla anymore.
Yeah, I hope he comes up with, a leader pops up in that area, like a startup founder mindset. Like we need a founder mindset to run that whole Optimus in order to have success. Yeah, I agree with that part.
Mm-hmm. And we don't know of anyone like that.
No, it's really unbelievable to me that there's few leaders that were identified, and he sort of lets them speak and gives them some space on the conference call and so forth. But I haven't, like Ashok came out on the AI and autonomous side, but on the we really need sort of like a Gwen Shotwell from an operation excellence and people management.
Mm-hmm.
I wish she had a couple of sisters or brothers we could we could bring. I tell you, she's been the rock star. And the longest, the employee number 6 or something.
Mm-hmm. I don't know if Gwen Shotwell is the difference though. I think the difference is that Elon has basically a controlling share at SpaceX, and he doesn't at Tesla. He has a much smaller percentage of ownership in Tesla. So I don't think I think things have changed. Like it's not the same Tesla from 10 years ago.
No.
Yeah.
And which
Very
is
unfortunate.
okay as long as it keeps reinventing itself into a startup again. But you got to be able to delegate. True leadership is building teams and passing the baton so you can go off and do other things.
Mm-hmm. Yeah. Okay. All right. So less than 10%. So what would change your mind? Seeing what would change your mind that's more than 20% or more than 10%, let's say.
Scaling of other companies that are, it's a first mover advantage in this area is key, and because adoption and trust with people, especially for consumers, it's going to be slow adoption use case type things. But I would say the competitor landscape, the Chinese are already moving fast. I won't be surprised if Google is partnering something like Figure did with BMW. Google might be doing something with Toyota,
Mm-hmm.
and they're
Of
already doing.
course.
And Hyundai already does that, right?
Yeah, and Chinese automakers have their own. I mean, there's almost like every single day there's a company that's announcing a humanoid of their own. All the Chinese automakers are doing their own humanoids, and that's the
Yeah,
problem. Really, there's really nothing that Tesla does in house or has any sort of expertise or technology that would allow Tesla to build it faster, better, etc., or lower cost. The Chinese will do it faster, better, lower cost, and Waymo has the autonomy and everything Elon has said. Like even at a deeper level, if you go one layer lower, every statement that Elon has made about FSD robotaxis has been wrong. So in the past, so whether if you want to take it from lidar to how important billions of miles are, which turned out to be not important at all, to when it's going to happen, all of those things have been wrong. It's not just a timeline issue; even the technology projections have been wrong. So I just, even he doesn't seem to either understand the problem or maybe not focus on it enough. I don't know what it is, but it's just not going the right direction.
Yeah, and I've always taken him as more of an aspirational goals when he talks about them. But I think the key is what we discussed earlier, which is that founder mode is missing for each one of these. Like Optimus needs a founder mode. Like he has a good. I forgot the guy's name. The guy that's running the semi. He's done town halls, and he's out in the press, and he seems pretty confident. And I like, you can just spin off that piece and let him run with it. I'm surprised they haven't accelerated that faster, since they have a bit more monopoly in that area in the US at least. But
Well, they don't have the batteries, right? They don't have the batteries. So, on for semi. But let me ask you
yeah,
this: what piece of Tesla excites you the most today for the next 10 years?
I've always looked at it, to be really honest with you, was Strobel is the one that sold me to the company when he sold it to me as an energy company. This is decades ago, when he was actually pitching the company as an energy company.
Hmm.
And so that's how I got into it, then Model S and so forth. But today, the energy is already defined, which is great. They've done terrific job there, but it's probably the Optimist that excites me the most, because I believe between Waymo and everyone else and Tesla, we will have definitely the safety standpoint of not killing 1 million people worldwide and 40,000 roughly in US on car accidents. So I feel good about that change they accelerated. But what's left is really just Optimus to do, especially with the aging population and people that don't really want to work. The work ethic after pandemic, it's pretty piss poor, especially for physical. So I think that would be very useful. The
Okay, so
elderly
energy. You said
population.
energy and Optimus, right?
Yeah, energy. They've already, I believe, they've accomplished. Maybe they'll
Well,
get the
let
trucks
me.
and
So
would
let
be
me
good.
ask you this on energy. 5 years from today, what's stopping, or even 2 years from today, what's stopping CATL, BYD producing the same product or even better, probably, that Tesla's producing in Shanghai today?
Nothing. It's already
Nothing.
happening.
Yeah,
No,
it's
it's
already
already
happening.
happening. Yeah.
So why are you so excited about this product? If the competitors can replicate it or do better at such a short period, or even ahead of Tesla, what excites you about it?
Well, what I said is that's what got me excited into the company when Strabo was talking about it a decade and a half ago or longer.
Hmm. Hmm.
Uh, but so I think they started the revolution in that area, especially with the peaker plants, the latency that they can bring, and what they did in Australia. So I think that's already the flywheel is already taken off, and it will hopefully become a commodity. A lot of other companies can do it easily. The Optimus is the only future piece that excites me um, at the moment in the company.
Okay, so energy competitors can replicate, do better with ease. There's nothing stopping them. And then Optimus, we said the Chinese. There's again nothing stopping Chinese from either doing better, faster, for cheaper at a higher volume than Tesla. And I guess
Yep.
that explains why you're not investing in the company now.
Yeah, I mean, it's a financial decision. It's you could have excitement about things, and a few of them have come to fruition, but then you just bet on the next horse. Horses get old.
Hmm.
and it's you got to go get a new stable,
Hmm.
start all over again.
Now, let me also ask you, when do you expect Tesla to produce the first $1 billion of profits from robotaxis? When will Tesla generate the first billion in profits from robotaxis?
I think it would be past 2030,
Yeah, I think so too.
and that's
Okay.
best case. So,
Yeah, I think so too. All right. Well, let me see if there's anything else. Markets are recovering this afternoon a little bit. Um, the Max 7 is still down quite a bit. Uh, Healthcare is doing well. Consumer defensive stocks are doing well. A couple of the financials are fine, and basic materials. So it's a very defensive type of day. Interestingly, the 30-year yield up 1 basis points. 10-year is down slightly. 5 years down 2 basis points. Crude oil is down to 58, so no change there since we started. PC came in fine, but the inflation numbers for March came in fine, but the market is obviously looking beyond March because of these tariff stuff. GDP was negative for Q1. Importantly, ADP, employment change, came in poor, 62,000. It was expected to be 128,000, so half of basically what people were expecting. Thank you, Wave. I'm going to move it down to listener. And then Chicago PMI came in also very low for April. ADP was for April as well. And if you dig into ADP a little bit, leisure was strong, which is surprising because which is also alarming because that's what's going to slow down in the coming months. Like leisure employment change was strong, but that's where the demand collapses in April. So to the extent that hirings and layoffs could, lag by a month or two, this ADP figure is going to weaken further in May. And so, yeah, it's going to be interesting if these employment numbers come in weaker than expected, especially on Friday, and the Fed still doesn't cut next week, which I give that maybe less than 1% probability that they cut. And if they don't cut when the markets are expecting a cut, 10% is expecting a cut, and also signal no cut for June, then I think we see a pretty bad sell-off in the markets. All right. On that note, unless if there are any other questions, we're gonna call it a day. Thank you very much, everybody. Let me see if there's any comments on YouTube as well. Thanks. Click the like button on YouTube if you can. Trying to grow the channel. I appreciate your help, and I'll chat with you all next time. Take care. Next time, take care.